Hi, everyone. I'm Chris Martinson of Peak Prosperity. It is Friday, February 9th, 2018. This is your weekly update. Wow, the markets, the equity markets, those are the ones that get talked about. I'm sure you've been hearing about them, that there's this global contagion now. And whether you live in Europe or Asia or the United States, stocks have been selling off. But stocks are for show, bonds are for dough. Stocks are what they tell you about. The real story that's lurking under here, there's a couple of them, actually a lot of them. It's really developing very quickly. One, interest rates are rising. We're seeing it all over the place. We're seeing it, of course, in the Treasury market. And with rising rates, a heavily indebted world gets into a little bit of trouble. We're seeing junk debt beginning to sell off with yields there rising. Of course, we saw the yields. And I say, of course, because who could have seen this coming? Of course, we all expected this, right? The bond yields for Argentina's long-term debt rising. Hey, so sorry for you people who bought those 100-year Argentine bonds last June. I know it was a scramble, right? 3 times oversubscribed, but good luck with those. And the stocks, even though today on Friday we had a 1,000-point reversal in the Dow, down 500, practically up 500. So it's happy print, good way to go. Whoever bought those last hour and a half of trading, whoever threw all that money in, hope you like what you bought. Because that's a happy print. That's what you get on a Friday, and it's pretty common. Not that we wouldn't expect a bounce somewhere in here, but the way this one happened, the PPT, the plunge protection team, obviously has been all over this as much as they can. But here's the thing: whatever's going on out there is a little bit bigger still than the ability to contain it. So we don't know what happened really, but the piece I wrote on Monday, in the aftermath of that big 1,000-point drop in the Dow on Monday, my analysis says that this was volatility itself is what blew up. And if you don't know what that means, there are people out there who are volatility traders. So here's how this works. There are derivatives, right? So I might buy a future on a stock. This is the derivative. This is the actual asset. And then there are derivatives of derivatives, right? So it might be that you and I make a bet for what the temperature is going to be at your house a month from now. And that would be the bet. And the underlying, in this case, would be the temperature itself. But then somebody else might make a bet on which of us was going to win that bet. That would be the derivative of the derivative. So that's how it works. And here's what was happening. People were betting on whether the market would be volatile or not. It had nothing to do with the actual pieces of the market, but rather whether their prices went up or down. And the volatility trade had gotten really crowded. Everybody was betting the same way, that there wouldn't be any volatility, so that when volatility finally did come, it exploded. And the way the world works, everything's all tied together. So you can't just have volatility blow up without all the computer algorithms that are running the whole world now suddenly deciding that because volatility is spiking, they have to sell futures, which then drives the cash market down, which then causes interest rates to do something else. It's on and on and on. It's all linked together. So we're going to be talking about this in a webinar, special webinar. We're putting it together as fast as we can for Tuesday, this coming Tuesday. And it's going to be at 8 o'clock Eastern. We're going to bring in a few experts. We're still figuring out who that is. And we're going to talk about this because there's all these components. You need to understand, if you care at all about understanding where markets are going or what's happening, this will be very educational, and we want to be able to unpack what is happening. So you can either click the links here to get to that webinar if you want to register for that, or come to Peak Prosperity. And also stop by there anyway, because we're talking about all this stuff. Now, while the markets are all being kind of uncertain, the United States is embroiled in what is certainly a political crisis, a brewing political crisis, and could easily turn into a constitutional crisis. We'll see. And the United States geopolitically just bombed both Syrian government forces and probably some Russian forces that were embedded with them. And Russia was quick to point out in a closed-door session at the UN Security Council that Russia is in Syria legally. Nobody invited the United States. They are not there legally. They haven't gone through any legal channels, and they're still taking it upon themselves to bomb government forces directly, including Russians. That's really, again, I'm not a big fan of this. I think it's a bad idea. I don't think Trump's in charge of that, by the way. I don't think Obama was in charge of that. There is a war machine. There's neocons. There's a Defense Department. Who knows what's going on, but somebody's over there pulling those strings, and they're really important. I guarantee you this: nobody in Congress voted on or approved those bombings. They just happened. right? So it's not like even you or I, if you're in the United States, that we have any representative or direct voting representation to influence that in any way. And then we also have China just put a whole bunch, few 100,000 troops on the border with North Korea because that's anything but settled as well. So we have geopolitical crises, we've got market crises and volatility, and we've got this brewing political crisis going on in the United States. You add all that up, and 2018, out of the gate, really interesting year. But let's remember, how did we get here? We got here because we should have taken our lumps in 2008, and we didn't. And then we should have allowed the markets they were rolling over in 2016, and the central bank said no, they didn't want that to happen. So they drove this to this last bit, and now we've got a very precarious situation. They're going to, of course, feel they have to try and rescue the situation, because if they don't, this could be very, very bad. And of course it could. Duh. We all knew that was going to happen. Everybody except the central bankers, who seemed just delightfully ignorant. And wasn't that a treat, watching Janet Yellen come out of her chairmanship and say to Jerome Powell, I don't know if she said this directly, but it was like one of these moves, where what she did was she came out on the talk circuit the next day on Sunday and said, and his first day is Monday, and she said, looks like commercial real estate's a little pricey and stocks are overvalued, and all the things that she just suddenly discovered now that she's out of her little job, things that of course she should have known all the way along. So isn't that a treat, watching somebody come out and give their retirement special? I love that talk, right, where they come out and they're like they suddenly feel free to say what they always should have said, but it's meaningless, because that's something they should have both known and acted on while they were in their office. Right? So, yeah, sorry, Janet, totally useless. Your name is mud in this story. Oh my God, did you screw the pooch on this one? So, I hope Jerome Powell does a better job. I hope he stands back. I hope he doesn't try and fluff these markets up too much more, because we need to wash the excesses out of the system. And I hope we can do it without a geopolitical or a domestic political crisis that's any worse than the ones we're already facing. So with that, hey, come by Peak Prosperity, check everything out. I'm Chris Martinson. I will see you next week.